The billionaire list features a lesser-known name, Gautam Adani, chairman of the Indian conglomerate Adani Group. He briefly reached the third spot as the world's richest person, but his rise has been accused of being a major deception. Hindenburg Research, renowned for exposing frauds like Trevor Milton at Nikola Motors, claims this is the greatest corporate con ever. The allegations have led to a $50 billion loss in Adani's fortune and $136 billion loss for his companies. The story involves criminal family ties, stock and accounting fraud, political favoritism, and a dispute between the Indian government and billionaire George Soros. Prepare yourself for an immersive adventure into the captivating story of Adani. When the world was struck by the pandemic, Gautam Adani's personal wealth stood at a remarkable $10 billion. In just 3 years, Adani managed to add $100 billion to his fortune, as reported by the Forbes Billionaire Index. By September 2022, he ranked third among the world's richest individuals, with a net worth of $145 billion, placing him as Asia's wealthiest person. Born in 1962 into a middle-class family in Gujarat, India, Adani's journey began humbly. With a natural business acumen, he dropped out of school at 16 and ventured into diamond trading in Mumbai. After a few years, he returned to Gujarat, where his brother ran a packaging factory. Little did Adani know that this seemingly small event would serve as his gateway to global trading. In 1988, Gautam Adani embarked on his entrepreneurial journey by establishing Adani Enterprises, formerly known as Adani Export. This company swiftly emerged as India's largest coal trader and mining contractor. Taking advantage of the economic liberalization policies of the 1990s, Adani expanded into trading metals, textiles, and agricultural products. Two pivotal ventures solidified his presence in the Indian business landscape. Firstly, in 1995, Adani acquired the Mundra port in Gujarat, which was later renamed Adani Ports and Special Economic Zone Limited, becoming the largest private port in India. Secondly, in 1996, Adani Power was established and has since become the country's largest thermal power producer. Since then, the Adani Group has thrived and grown exponentially, establishing its position as India's infrastructure magnate. With 13 ports, 7 airports, and 6 coal-fired power plants, they stand as the leading private player in the energy sector. The Adani Group holds a prominent position in various sectors. They lead in solar panel production, are the primary importer of edible oil, and the largest gas supplier to cities. They have also ventured into diverse areas such as data centers, financial services, digital services, real estate, cement, and media. As the Indian government focused on infrastructure development, the Adani Group found itself in the right place at the right time, becoming significant partners. However, the relationship between Gautam Adani and Prime Minister Narendra Modi has been controversial, with suggestions of favoritism towards Adani. In 2018, the Adani Group secured numerous bids in the natural gas industry and won all 6 leases for privatized airports, arousing allegations of cronyism and acting as an infrastructure arm of the government. The individuals involved in running the company have also faced scrutiny. Despite employing over 23,000 individuals worldwide, the Adani Group remains a family-dominated affair. Within the 22-person leadership team, 8 members of the Adani family hold significant positions, often making decisions independently and keeping their actions veiled in secrecy. Legal issues have also plagued the family's involvement within the group. Rajesh Adani, the chairman's younger brother and former managing director of Adani Exports, later renamed Adani Enterprises, faced charges related to a diamond trading scheme, including the creation of fake offshore companies. Despite these allegations, Rajesh was not dismissed but instead rewarded with a promotion to the position of managing director of the Adani Group. Another family member, Jatin Vora, was charged as the mastermind of the same diamond trading scam and accused of providing false statements to regulators. Shockingly, Vora was also promoted to the executive director of Adani Australia. Furthermore, the Adani Group itself has faced serious charges of corruption, money laundering, and embezzlement amounting to $17 billion of taxpayer money. Unfortunately, investigations into these matters have been hindered or obstructed by the Indian government. Despite the Adani Group's tagline of growth with goodness, their skyrocketing market valuations raise suspicions. The group's 7 publicly listed companies experienced astonishing rallies in stock prices, ranging from 250% to an astounding 4,100% since 2020. However, such remarkable growth is atypical for infrastructure and capital-intensive companies. Even considering their alignment with the government's vision, these inflated valuations lack sound reasoning, as Warren Buffett famously warned against overpaying for stocks. Analysts speculate that a market frenzy and blind optimism may have driven the surge in Adani stocks. Nonetheless, Nathan Anderson, mentored by Harry Markopolos, became suspicious of the company's extraordinary growth and founded Hindenburg Research, a New York-based short-selling firm. With insider insights and evidence, Hindenburg intended to expose the truth about Adani and potentially bring the company down. On January 24th, Hindenburg Research, via a Twitter account, accused the Adani empire of engaging in widespread stock manipulation, overvaluation, and long-standing accounting fraud, dubbing it the largest corporate fraud in history. According to Hindenburg, the Adani family orchestrated a complex scheme involving offshore shell companies and cash manipulation to artificially inflate stock prices. It is important to note that these allegations have not yet been proven in a court of law. Hindenburg's vested interest in short selling raises caution when considering their claims. However, given their successful track record in exposing fraud, such as in the case of Trevor Milton, it is worth noting the allegations against Adani. Hindenburg also alleges that Adani management holds 75% of their own stock, which theoretically provides them the ability to control supply and manipulate prices if desired. According to Indian regulations, there are 4 Adani-listed companies that potentially violate the country's financial rules. Allegedly, there are offshore companies in tax haven jurisdictions like Mauritius and Cyprus holding significant amounts of Adani shares. These undisclosed investments solely focus on Adani companies, raising suspicions. Hindenburg refers to these entities as stock parking entities, with one such company, Monte Rosa Investment Holding, controlling 5 entities and investing $4.5 billion in the Adani Group. Other companies involved in similar schemes include Elara Capital in Mauritius and New Leaner Investment in Cyprus. Adding to the mystery, Gautam Adani's elder brother, Vinod Adani, has a secretive role within the group and was mentioned in the Panama Papers. Hindenburg Research discovered that Gautam Adani and his associates established around 38 shell companies based in Mauritius, as well as other businesses in the UAE, Singapore, and the Caribbean. These companies often attempted to conceal their true nature through fraudulent websites. Suspicious transactions between these entities mainly benefited Adani enterprises. Additionally, concerns arise regarding the source of Vinod Adani's wealth, as he reportedly received a $240 million loan from a Russian bank through a Singaporean entity, which was not disclosed by the Adani Group. Allegedly, only 10% of Adani stock is publicly traded, and the combination of fake companies and 75% stock ownership allows for manipulation of demand and potential accounting fraud, as Hindenburg claims that these offshore funds are indirectly controlled by the Adani Group. Over the past 2 decades, the Adani Group has been involved in multiple stock manipulation scandals, including the infamous Ketan Parakar scandal from 1999 to 2001. The Adani family's private companies were found guilty of aiding and abetting Parakar's scheme. Hindenburg alleges that Parakar, who was banned from the market, continues to work for the Adani Group. The family is also accused of using their own shares as collateral for loans, inflating their value through fake corporations. Adani's highly leveraged debt-to-income ratio of 2,000 and insufficient assets to cover debt raise concerns. The interconnectedness of the group's companies poses a liquidity crisis risk. Additionally, Adani's companies have excessively high price-to-earnings ratios, particularly Adani Green Energy. Following Hindenburg's report, the Adani Group experienced significant wealth erosion, losing billions in market cap and facing substantial stock value decline. Despite the Adani Group's recent focus on financial health and debt reduction, major investors like Morgan Stanley have divested from the company. Gautam Adani has lost his position as India's richest man, but remains a billionaire. Adani denied all allegations in a lengthy rebuttal, while Hindenburg criticized the response. George Soros made scathing remarks about Adani, suggesting it could lead to a democratic revival in India. The Indian securities regulators are investigating the drop in Adani Group's shares, and global banks have halted accepting Adani's collateral. Adani plans to regain financial confidence by cutting spending. The long-term impact on Adani will depend on the outcome of investigations and legal decisions. However, the close ties between the Adani Group and the Indian government may impact the effectiveness of the investigations. Overall, Adani is facing a challenging period amid concerns of concentrated economic power and potential vulnerabilities. The controversy surrounding Adani's influence on the Indian economy could have significant political and economic consequences. There are legal and ethical issues involved in Hindenburg's actions. Legally, there are concerns of market manipulation and insider trading if false information or non-public information is used to impact stock prices. However, no allegations of illegal actions by Hindenburg have been made at this point. Ethically, it raises questions about the motivations behind Hindenburg's report and whether they are genuinely seeking to expose fraud or driven by financial incentives. The impact on innocent parties and the overall benefit of revealing potential fraud are also ethical considerations. Adani's lengthy rebuttal is seen as a tactic to deflect attention and overwhelm investigators. And that's a wrap for today's episode of Business Central. Stay connected with us, like, comment, subscribe to our channel, and click that notification bell so you won't miss a video. Stay inspired, stay informed, and keep making waves in the world of business. See you in the next one.